So first I'm going to start with Alan. So let's bring up Alan. Everyone give Alan a big hand. Tell us a little bit about yourself. We see where you're in the cybersecurity area, and you didn't send me this video, this little picture here. So
I did not know.
Added that.
Yeah,
so
someone added that.
Something really deep about that, I guess. So.
Yeah, so I do cybersecurity and oil and gas last 4 years.
Okay.
And yeah. All I can say.
Are there any like IT guys, nerd guys in the room? That's your man right there. Okay.
Okay. And so, first of all, how long have you been a member of Lifestyles?
So I joined roughly almost a year ago.
Okay,
Yeah.
almost a year. So you joined during COVID.
During COVID.
Okay.
I was in your last class, in-person class.
Okay, so you joined during COVID, and you came out and you found this property, and so we have the before and after pictures. So what Lifestyles teaches is we need to find properties that need a lot of help, and we walk into properties. We don't want to find those nice, pretty properties. We want to walk in and they look like the before pictures. We want to find the ugly, dirty, smelly properties. We want the cat pee in the carpet. You know, that's the smell of money. And so, so we want these properties. That's where you make your money. So tell us how you found this property, and we see kind of what it looked like. But tell us a little bit about what your first reaction. This was not your first property, though.
No, this is my second property.
Okay, so
yeah.
go back to your first one and talk about what it was like for you to walk into this properties that looked like this, and what were you thinking?
Yeah, this was the first property was a lot easier to look at. This one definitely needed some work, $57,000 worth of work. But I mean, yeah, I just needed a full gut rehab, cat piss for sure in this one. But like David said,
do you have experience? Have you done this before? That's what people are new thinking. They're like, this guy must have did it before to do a 50,000 rehab.
Yeah, so I mean, the first house definitely helps when you jump in.
But on your first one, though, had you done real estate investment?
No, I just did a whole bunch of YouTube videos, just kind of like knowing the fundamentals, never really had any hands-on type of work, but then joined Lifestyles, got educated.
Okay.
And, 2 houses in a year.
See these kids today, YouTube videos. I've been a member for
Who'd
several
be happy
years.
if a young guy like this does 2 houses a year? Give him a hand. That's huge. During COVID, that's pretty impressive.
Mm-hmm.
Yeah,
Right?
yeah.
Okay.
During COVID.
Got over your fear.
Yeah, I just jumped in. Yeah, any more details?
What do you have for us?
Sure, yeah, so in this house, large rehab, so new AC and ducts, blew out some walls just to kind of open up the space. Made if you go back to the next slide.
Previous one?
This was actually the new bathroom that we created, so that was like a enclosed patio, and now it's the master bathroom.
Now, when you said we did this, you were out there with a hammer and saw and
No, definitely
you
not.
were your cybersecurity, you had your little work tools.
No, I just had a good team. So I had Jennifer McCormick over there, and then I had my GC, and we just
Jennifer's one of our realtors at Lifestyles, just so people know.
Yeah. And just had this idea how to increase ARV by increasing the square footage. I forgot we also did a garage conversion on this one, so we made it it was a 3-1, now it's a 4-2.
Okay.
So big job.
So you build a team around you. You didn't lift up a hammer. You paid people. You wrote a check for everything, right?
Yeah, just
Give me a hand because that's what you're supposed to do. You don't lift up a
love
hammer.
that check.
Yeah, and this was a pretty substantial rehab. And our normal rehabs average right now in the Houston area about $30,000. So this was almost double what the standard rehab is. This is a second property, so you had a little bit of experience. And the numbers obviously worked out great. So he mentioned ARV, that's after repaired value. That's kind of the appraised value. So when you go in, and there's a 2-loan process here, hard money loan and then a conventional loan. And so you were able to buy the house for $82,000, about half price because of the condition it was in. And after rehab and closing costs, your net equity was about $14,000. And so your out-of-pocket was $23,000. So you paid $23,000 and you got $14,000 of instant equity.
Correct.
Increasing your net worth. That's something you do not do in the stock market. You don't go buy $23,000 of Apple stock and all of a sudden you're worth an additional $14,000. One of the benefits of real estate investing.
So is that the numbers I told you guys, 20 to 30,000, somewhere in that range? Okay.
Yeah, so that's
I said you should make between $200 to $600 a month. I mean, $200 to $600 somewhere in there. So let's see where he's at.
And he's an overachiever. He's making $650 a month.
He made me a liar. Didn't I tell you the market's better now for real estate?
Yep.
Yep.
Yeah.
Interest rates
It's
lower.
a tough, it's a very strong seller's market. There's limited inventory, but yet people like Alan and our members are out finding fantastic opportunities even in this market. And they do this, and I'll get to that in another slide. But so these numbers are great. So you're at a 63% return on equity. And then your cash flow is $650 a month, $7,800 a year. So that's a 34% cash on cash return. A little bit better than what you get at the bank, and a little bit better than, even though the market seems to be doing well. I'm not in the market anymore, but it seems to be doing well. But it's really just a rebound from when it dropped during COVID. But the Standard & Poor, as I understand it, S&P 500 averages about 8 to 10% a year over a 5-year period, and he's making 34%.
Who'd like to make 34% a year tax-free? That's peeing your pants excited. That's pretty awesome.
Yeah. I saw
Give
a-
a hand for that. That's huge, man.
I saw a hand go up. We're going to go through these about 3 or 4 more slides, then we're going to take questions.
take
So
questions.
Just hold it for just a couple of minutes for us. Okay, so now this is again your second property. So your first property, you're making 5,200 cash flow, 15,000 in equity. So in a year's time, you have added annually $13,000 of cash flow, and you've increased your net worth by almost $30,000. So again, fantastic numbers on that. So, and this is what's being done during COVID, and also being done in a very tough market, an up market as we call it. There's up markets and down markets, and as David teaches, everybody teaches, Lifestyles members make money in up markets and in down markets. So.
Yeah, that's one of the most powerful things I could teach you guys. All the crap you hear out in their news, ignore that. What you're going to learn here at Lifestyles is we make our own economy. Who likes that idea better? Because I'm going to teach you how to find off-market deals, wholesaler deals, how to deal with, finding somebody going through a divorce, a short sale. We don't pay full price. Who likes that idea? We make our money when we buy, and that's what he did. That's why he has these equity captures.
So your numbers are great. So looking back before you got into Lifestyles, what was the motivating factor to get you to Lifestyles? Why did you decide to do this?
So I joined. I knew real estate was, a good way to at least, put some money in real estate and grow it. Watching YouTube videos, a lot of people. I think the statistic was 75% or 70% of millionaires, they have some real estate in their portfolio. Yeah. So I just knew it was the way to go. But it was really hard just to kind of navigate, kind of like what the YouTubers say. To see what the YouTubers say, and they're in different markets. But I mean, I found Lifestyles through some coworkers that I had that were actually members.
Okay.
And I thought it was great that it's a real estate mentorship program, but it's based in Houston where I live. So I just wanted something a lot more local, and I think I found the right place.
Awesome.
Okay.
So compare your returns so far in your portfolio to your 401k IRA, whatever you were doing before. How are the returns in Lifestyle since then?
I know it's been a crazy market the past year, but definitely 34% consistently every year until I sell that house. I mean, it doesn't get better than that.
Do you realize that in 3 years, at 34% a year, he got all his money back? Would that be pretty cool? And you have to realize, even though we only showed 2 ways, do you realize these deals are making money 5 ways? So I want you to keep that. I know some of you new people don't know that, but I'll break that down in the seminar. It is the only asset class where we actually make money 5 ways. The other ones don't do that, so it's huge.
Yeah. So you mentioned you see a stable path forward, but anything else about what you're hoping for and what you're expecting going forward in this? We'll talk about your kind of goals in a second, but just how, as it says here, how Lifestyles has changed your life. So.
Yeah, I mean, I definitely see, doing 2 houses in a year. Next year I can easily do maybe 4. I mean, it was kind of, I liked having a project just to kind of work on. Like it takes around 3 months, something to see every day, to watch every day, to crunch some numbers. It's a nice hobby, just to kind of do something.
It's a hobby
else.
to make all that extra money here. What's a hobby where you actually make money? Not like a boat where you pay money, right?
Okay. And as David's already talked about, this is a team sport, so we're going to talk a little bit about who's on your team. And Evelina Romlin was your mentor, and Evelina's sitting over here. She's one of our rock star mentors also.
She came from Sweden.
That's right. She has a different accent than I do. But
Yeah. It sounds like she's from Georgia.
And you mentioned Jennifer. Jennifer McCormick. Stand up for us a second, Jennifer. Jennifer is one of
There's
the...
a legendary Jennifer.
Jennifer, the entire Lifestyles Realty team are rock stars. These are the people that when you join at a certain level, these are going to be your teammates, and they're going to help you find these kind of properties and to allow you to get these numbers. And I always misquoted. I'm glad to have the realty manager, Jeff, on the front row here. There's 35,000 active realtors.
35,000 realtors.
I got it right. 35,000 active realtors in the greater Houston area. Jennifer was in the top 5 for several years in a row now of realtors in the greater Houston area. So
think of the volume that these people do.
yeah. And so we have several realtors that are traditionally in the top 25 of these 35,000 members, 35,000 realtors. These are the people who bring these types of properties to you and allow you to get these kinds of returns. Tell us a little bit about anybody else on your team that stands out, anybody that's really helped you a lot. I'm
Sure.
sorry, one other thing. I see Jeff over here almost in, Jeff's another realtor on our team, Jeff Jenkins over here. And we have, I think, what, a dozen or so realtors, so.
That's the first time I ever seen him. I always just see all the email deals. I never see the people in person.
Yeah, so Jeff and Jennifer, and like two of about a dozen great realtors, so I didn't want to, ignore Jeff. But so tell us a little bit about some of your experiences working with your team and putting this team together.
Sure. Yeah. I mean, obviously Jennifer's a rock star. We know that. We all know that. But other than her, Jose from JMB Construction, amazing contractor. He had around maybe at 1.6 to 12 people working on my house, getting it done in 2 months. $57,000 worth of rehab. That's a lot of work.
Rehab in a short time.
Yeah.
He was able to do it, within 2 months, so I can, refinance and not pay that extra hard money percentage.
There you go.
But amazing guy, had good ideas on how to blow out the wall and open up the space bigger. So definitely relied on his expertise,
Okay.
and Jennifer's expertise. So just amazing team to work with, and
Cool.
hopefully I can do it again soon.
Yeah, and David's going to teach you how we do this, how you set everything up and you get this thing done quickly and efficiently and in the right numbers to make this all work for you. And that's what David's going to go over this weekend when you come to the seminar. So we touched a little bit about, you see here what your kind of immediate plans are, but to kind of talk to us about big picture. You're a young guy. What do you see happening 2 years, 5 years, 10 years down the road?
I definitely do want to buy some more single-family properties next year. But end goal is definitely multifamily. And, since I'm younger and I got more years ahead of me, runway-wise, I think I want to be a lead investor,
Who thinks he's going to do that? Give him a hand. You know he is. He's a go-getter.
Yeah, that's the plan, short-term plan, long-term plan.
Okay.
But I think it's been a good start and look forward to spending more years here with you guys.
Awesome.
Excellent. Okay, now we can take some questions. Let me back up to the slide in case anybody has any questions on the number. So, any questions? One back here.
The 14,000, is that in the 23,000 out of pocket? Is that above and beyond that, or are you still?
And repeat the question.
So your question is the 14,000 net equity, is that above and beyond the 23,000?
If you made your 23 back,
Yes.
it's out of pocket.
Yeah.
Yeah, in other words, because remember we put money down, so because of loan to value, that's the equity. Yes.
So the 14 is above that.
Yes. After everything, he sells it, boom. If he sold it tomorrow, which he won't, because he used the F word, which is flip. We don't do that at Lifestyles because we want to pay no taxes. We have to hold at least a year and a day. But he would actually make 14 grand. You understand?
Any other questions? Yes.
How many other properties did you look at before you selected Jackson Street?
Okay, the question, we're going to repeat the questions. We have a live stream
Remember, we have people
audience.
on
So the question was, how many properties did you look at before you selected Jackson Street?
So for Jackson Street, I was closing
and also,
on
who's
LA.
doing your online questions, Keith? You?
I do right here.
Oh, okay.
So I was closing on my first property, the second close, refinance, and I found this property literally maybe 6 days afterwards. So very quickly.
And how did you find it?
Jennifer brought me the deal.
There
so,
you go.
She's like, I think you might like this property. It's in
Well,
Lamar.
she brought you this one directly. Might be in your
Yeah, exactly. Yeah.
range.
She kind of knew what I was looking for.
Who likes that? Knowing a relationship with a realtor says, here's one that would fit you. And you go, oh, shit, I'll make, 20 grand and make 30% return, whatever it was. I didn't mean to swear.
Yeah, sure.
I'm human and fallible.
I'm sorry. Yeah, question back here.
How did you know what neighborhood to buy in?
So I've gone through a lot of case studies, and a lot of people talk about Lamarck. And I've been to Lamarck before looking at some houses, and it's a really nice, quiet community. So I've seen some houses there. I kind of know what the feel is. But then when people come to case study and they're like, yeah, I got this house in Lamarck. It's great. I love the neighborhood. I got a sweet tenant, and I have a sweet tenant now too. So just coming to case studies, kind of, seeing where they're buying their houses, what they feel about the neighborhood, but also just going to road shows or just seeing all the houses that you can see and just kind of getting a lay of the land, So just getting out there. I know with Calais, it took me maybe saw 8, 9 houses before kind of settling on Calais. But I mean, that was kind of like my just being
Getting
too
comfortable
new
'cause you're
and
new, yep.
I didn't jump in, And then I jumped in on the first one, and the second one, it was kind of like almost a no-brainer.
And just so you know, we have people from all across America. We have people from California literally buying here in Houston, working with mentors like Sorrell and, you know, the other
Realtors
mentors
like
as well.
Jennifer and Jeff.
Yeah, so you don't have to be here to do this. We have people doing it remote as well. We're just showing you a guy who did it here in Houston tonight.
Yeah, and this case study is one part of the education. David's 2-day training this weekend is one part. We have dozens of hours of education online that you'll go through. So hundreds of hours of education. You're going to go through these classes, and we teach you everything. The company teaches you everything from looking for properties, evaluating properties, and so it's not just a one-stop thing. You're going to learn a lot of things about how to evaluate not only properties but neighborhoods, drive neighborhoods, and look up crime stats and all kinds of things. And then you invest where you're comfortable investing.
David, do we have one or two online people? You have to turn on your
We
microphone.
got one over here too.
We have,
No, let me make sure we get some online, otherwise we'll forget
we
them.
have 255 people online.
No, that's not what I asked. I said they have a question.
You actually said, do we have one or two? Yes, okay, yeah. I got a
One or
question.
two questions.
Yeah, I know. Hold on.
Let me get over here before he starts throwing things at you. I'm going to hide behind.
Here, let's go ahead over
God,
here,
he's an
David.
angry elf.
Yes. Have the material shortages, like lumber, et cetera, affected anything in the rehab? Did your plan go as planned? Did your
Affect you at all?
Yeah, so I think at the time the prices were going up, but my bid wasn't excessive by any means.
And a lot of people are afraid of that. How many people heard that lumber futures dropped 50% this month? So really, guys, it's a trailing indicator, meaning if it changed by next month, it'll be back to normal. So guys, by the time you're in your next deal, it probably won't affect you, okay? So I know that's a big fear out there, but I really don't think it's gonna matter. Because our numbers, besides, if lumber went up, what else went up? The price of properties went up, so it correlates.
Dave, do you have another question?
No, that's the only
All right,
question.
we'll take, I think, a couple more live, and then we're going to move on.
Look, they're fighting. Oh, you have them over there? Okay.
Yeah, hey, like everyone else, right? We don't have the what $57,000 to put down for the rehab. So how did you enter that with the hard money, or how did you get there?
Yeah, so with the hard money lender, they lend you 75% of the ARV. So the ARV was 166, so they'll lend you 75% of that. So that should include enough for to purchase the house at $82,000, and then the rest will kind of fund your rehab. If there's
So
anything
let me
more than that.
explain that in simple words if you're new and you don't understand what we're saying. He didn't have to come up with the $57,000 worth of rehab up front. What happened was the bank held back $57,000 in an escrow account. As his guys were doing the work, let's say they got halfway through, they would then send out an inspector, make sure they do the work correctly. Then he does a draw for that amount of money. Then they send him the money, not the workers, him the money, and then he pays the workers. So you're doing it as you go. I'm just trying to explain in simple terms. Everybody understand that?
Yeah.
Okay.
So, Alan paid $23,000 out of pocket. He didn't pay 50.
That's all he had to come up with, that 23 grand.
Yeah. Now, there's some
Great question.
reserves and things like that, but he didn't come up with $57,000 to do the rehab.
Let's let the young gun ask a question.
So I'm pretty sure they showed you projections of these numbers beforehand. How accurate were they towards these
Great
numbers?
question.
That is an excellent question.
Yeah, so these numbers were a lot better than what I first started out with. I forgot the exact numbers, but I mean, I think initially when I got the deal, it was maybe 135 ARV. And then, yeah, and then when
In other words, what he's saying is the way our realtors do everything, we teach them to be super conservative because we don't want it going the other way. Does it make sense?
Exactly.
So as it became better for him? Do you like that way of that's what we do here at Lifestyle.
Think about it. If Jennifer sends out 2 to 3, 4 properties a day or whatever to the membership, and members go in and look at these properties, if these numbers went the other way, if this was projected at 185,000, it ended up being 166,000, or she projected the cash flow to be 15,000 and out of pocket to be 15,000, it turns out 23,000. Do you think she'd be in the top 5 of the 35,000 realtors if she consistently gave out bad numbers?
Yeah, she'd be working at Keller Williams or somewhere else. That's a joke. Don't read into that.
Yeah, so the realtors are conservative with their numbers, and not all the time, but quite frequently the numbers get better once. And also, if they don't get better, there's what David teaches you and what we help you with throughout the process is to evaluate these properties before you ever put a dime down. Well, you may pay for an inspection, but if the numbers aren't looking the way you expect them to look, don't buy that property. Wait for the next one to come along.
Yeah, there's a 7 to 10 day option period. I'm going to teach you. I spent a lot of time on here's who all you have to line up to make sure the numbers are accurate. We get 3 of this, and 3 of this, 3 of this of different types of contractors. I'll explain all that. That mitigates your risk We're very adamant because we don't want to lose money. That's rule number one. Never lose money. You know your numbers going in. Before he ever bought the deal, they ran their numbers. They're very conservative.
Okay, Houston with a lot of the wholesale off-market properties, so it's not an option period, but we
Right.
still train you how to do everything up front before you spend almost anything, inspections, something like that. But you're not going to be out of pocket $3,000, $5,000, $20,000 before you realize, oops.
And
Sorry.
besides just having Jennifer, an agent, helping him find a deal and all that, he also can reach out to a mentor, Sorrel, Evelina, Doug Butler. He has multiple mentors he can reach out to. I don't understand this, or what's this, or what's that. That's also very powerful as part of his team to make sure everything's right.
Yep.
Okay?
Okay, well, I think we only have time for one more.
Was that increase based on the market at the time, or are you increasing the square footage?
So I increased the square footage with the garage conversion, and then the square footage in the new bathroom. So I mean that definitely brought up the ARV higher. But then it did go higher even after that 2-month period with the second appraisal, just with
Did
the
you have
market
any-
being hotter.
Did you have any city permit problems with either one of those properties?
No, I didn't.
Question was, I didn't quite hear, but I think she said, do you have any permit problems?
City permit problems. Sometimes the Houston permit guys are problematic.
Yeah, for the ones that I had to pull, like they got it done really quickly. So I didn't ask any questions. It was like, it happened. So
Yeah. Another thing is we have a checklist. It's called a single-family timeline checklist, and one of the items on that checklist is permitting. So you work with your general contractors to pull all the permits that's needed, and again, you want to do all this stuff up front. Okay.
Awesome.
Thank you very much.
Thank you so much for sharing your story, Alan. Appreciate it, man. Awesome. Good
Thank
job.
you.
Good job, brother.